everyone, welcome to another class of Lesson of Squad. Today we will be continuing with the manufacturing class part 2. So in our last week's lesson, we spoke about production cost, then we differentiated between variable and fixed cost, and we did a quick review on break-even point as well. So if you haven't watched the previous class, please go to watch it because this is a continued class and we are just building upon it. So today we are going to look at the recap on break-even point, and then we're going to look at the formula of how to calculate the break-even point, and then I'm going to explain that how does fixed cost actually influence your break-even point. So firstly, let's do a recap on our previous class on break-even point. So when a manufacturer or a company incurs losses, it's because the cost price is higher than the selling price. And vice versa, when they're making a profit, it's because the selling price is higher than the cost. But when you're sitting on a break-even point, it's at a point when our cost price is equal to our selling price. At this point, neither do we make a profit or neither do we make a loss, but we just have enough money on hand to actually cover all our fixed and variable costs. And the purpose of calculating break-even point is so that manufacturers actually know that how many units they need to produce and sell before they can start making a profit. So here's our formula on calculating break-even point. This is to calculate the number of units that you need to produce and sell in order to meet our break-even point. A point where neither we make a loss and neither we make a profit. It's just where our selling price equals to our cost price. So here's our formula, which is total fixed cost divided by the contribution per unit. Now remember in our last week's class we spoke about total fixed cost. And we said this is a cost this is the cost that does not change no matter how many units are produced. Our total fixed cost will still remain the same. So remember we used the example of rent where we said whether we produce 4 units or whether we produce 2 units, we will still pay the same amount of rent at the end of the day. And our contribution per unit is our selling price per unit minus the variable cost per unit. When you take your selling price per unit and you deduct the variable cost per unit, what is actually left over from it is our fixed cost per unit. And that's what we use to calculate our break-even point in units. We say our total fixed cost divided by the contribution per unit, and our contribution per unit is actually our fixed cost per unit. But now I want us to look at the story behind the break-even point. So let's have a look at this table. So here we have our number of units that we produced and sold, which runs from unit 1 up to 7. Then we have our production costs, the cost incurred to produce and sell the unit, which is fixed cost plus our variable costs. As you can see, our fixed cost remains the same, right? It's 120 Rand for no matter how many units we produce and sold. So we just produce and sold 1 unit, our fixed cost is still 120 Rand. We produced and sold 2 units, our cost is still 120 Rand. But when it comes to our variable cost, as we discussed in our previous lesson, that the cost increases as we produce more goods and our cost decreases as we produce less goods. Here our units are increasing, right, as we produce and sell them. So our variable cost is also increasing, which is 20 Rand per unit. So we have produced and sold 1 unit, our cost is 20 Rand. We produced and sold 2 units, so that's 2 times 20 Rand, which gave us 40 Rand. And now our total production cost is the fixed cost plus our variable cost. Then we get our selling price of the unit sold. So when we sold 1 unit, right, our selling price per unit was 50 Rand. We sold 2 units, our selling price per unit is still 50 Rand, it's just total selling price is 100 Rand. Now let's look at the last column, which is very important. Now, can you see here we made a loss. But why? Because for the first 3 units, our production cost is higher than our selling price, and that's why we made a loss here. And then when it came to our fourth unit, our production cost equaled to our selling price, which gave us zero. And that's what our break even is, right? When neither we make a profit and neither we make a loss. So that's where our break even point is met when we make and sell 4 units. And then our last 3 units, which is 5, 6, and 7, we make a profit because our total production cost is less than our selling price, and thus we made a profit here. But how does it happen that here we're making a loss, then suddenly here we met our break even, and now we're making a profit? How does this happen? And that's exactly what I'm going to show you now. I'm going to show you that what influences this to happen. So now we're going to look at how cost of production is influenced by fixed cost and the number of units produced, which will affect our profit, loss, or break even. As we know from the very beginning that the less cost incurred on each product, the more profit we are eventually going to make. But how do we reduce the cost on per unit? And we do that by producing more units. So let's look at the 2 examples of shirts I have ahead of me. So in the first scenario, our fixed cost is 800 Rand for the rent, right? And the number of units we produce and sell is 2 shirts. Now we take that fixed cost and we divide it amongst the 2 shirts, right? And what do we get? We get a cost per unit of 400 Rand. And in the second scenario, our fixed cost is still the same, 800 Rand, right, for rent. But now we produce and sell 4 shirts. So now we basically take the 800 Rand and divide it amongst the 4 units of shirts that we sold and produced. So, and then you can see that our cost per unit becomes 200 Rand on each shirt. So can you see how in our second scenario, our fixed cost per unit decreased because we produced and sold more? Now let's go back to the first scenario where we produced and sold 2 shirts. So here you can see that our cost price per shirt is 400 Rand and our selling price is also 400 Rand. So here we have made a break-even point by producing and selling 2 units because neither we made a profit and neither we made a loss. But now we go to our second scenario where we produce and sell 4 shirts, right? Our cost price is 200 Rand per shirt and our selling price per shirt is 400 Rand. So that means we get a profit of 200 Rand by producing 4 units. So that's why now we can come to a conclusion that the more units we produce, our fixed cost on per unit will become less, which will in turn increase our profit on per unit. And that's exactly what's happening in the table as well, where we start making more units, where we start producing more units and selling more units, right? Our total fixed cost is dispersed among the units, and as we produce more units, our fixed cost per unit becomes less. And that's how we start having when we're making few units, we are still making a loss, but then as we increase our number of units to be produced and sold, we ended up with the break even. And then when we decided to make even more units, right, we ended up making a profit. So the moral of the story is that the more units you're going to produce, our fixed cost per unit will decrease, right, which will result in us making more profit. So now we come back to our break-even point formula. This is the formula that I discussed earlier, where you need to calculate that how many units you need to produce in total, so that you can you can come to a break-even point. And now when we need to calculate the break-even sales in the value where the cost price equals to the selling price, and neither we make a profit and a loss. So we take the break-even point in units, which we calculated here, times the selling price per unit. And when we're done with the calculation, we get an amount, and that amount is the amount where the selling price equals to our cost price. So we are done with today's class. However, we will be still continuing with manufacturing. In the next class, we are going to look at all the main general ledger accounts relating to manufacturing. Until then, please feel free to contact us on Instagram or WhatsApp or drop us a mail at Lesson Up Squad. And also please subscribe to our YouTube channel Lesson Up Squad. Till then, I'll see you next time. Goodbye.